I can't hear anyone. I'm gonna reconnect. You guys take it from here. All right,
I
can
think
you-
we can all hear each other except for Zach. I think Zach is the only one who's muted right now.
I
Zach.
couldn't hear anyone. I
Zach
just
Zach
is the
has
reconnected,
problem
failed
and now it's
the
child.
good.
opening of the show.
No, 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 no.
All
The
right,
ghost
guys, I'm
abandoned
gonna just
Zach.
launch
Naomi, take it.
this. I'm going to launch
Zach's out.
this. We're going to start off by talking about the central bank digital currency initiatives all around the world. They really seem to be ramping up at the moment. So the Bank of Russia just published a new CBDC paper outlining its digital ruble plans. They have picked the banks already to pilot this new program. There are 12 banks that they have named, and they're going to be sort of diving into this and seeing how it works for them. And then on the other side of things, you've got China. Their CBDC trials have reached the Beijing subway. So now people in China can use this digital yuan to pay for fares on the subway. Super interesting stuff going on all around the world. As you guys know, I'm not particularly excited about central bank digital currencies. I see it as kind of scary, this centralized, digitally controlled thing that the people have to kind of coerced into using. But I'm going to throw this to the group to get your thoughts on all of this. Will, I'll get your thoughts to start off with. Where are we going with all of this? When are we going to start to see CBDCs as prevalent in society?
Oh, Zach's back, but he's a ghost.
Yeah, Zach's gone.
So
He's still disrupting the show. Oh, there he is.
he's back. Look
Dang.
at him.
Sorry, my bad.
Wow. Wow.
Anyway,
Can't even
talk
plug
amongst
in an aux
yourselves.
cord.
Talk amongst yourselves. I gotta publish a story. All right. See ya.
We need your views, Will. We need them.
Let's talk about CBDCs. Yes. So great question. Where are CBDCs going? I think that is anyone's gamble right now. If this is going to work out, I think a lot of people on the negative side are like, this is another iteration of blockchain, not Bitcoin, which obviously didn't work out too well. It worked out to a degree. There's some other chains like Ethereum that are doing quite well, but overall, all these enterprise chains that people tried to launch totally crash and burned. So some people see it that way. CBDCs on the other side, people are like, oh, this is like very frightening, and every country might just one day develop its own currency and kind of box out banks and the middlemen just from the top down and have more control unilaterally. That is what kind of surfaced in this report from Anna Batakovan, who wrote this story for CoinDesk. She noted that Russian banks are kind of freaking out a little bit that at this pilot program stepping onto the stage. It's understandable because if you have a central bank digital currency, there's no reason to have an account with a commercial bank. You just don't need them. The government at the top can just kind of coordinate everything. They can coordinate how much money is in your wallet. They can kind of look into your account, make sure that you're having like the savings and the checking and you're getting all the interest rates and all that good stuff. And so that's going to really streamline the banking industry, but perhaps not in a positive way, because you wouldn't have that disintermediation or decentralization of banking powers across multiple parties. You just have the central bank and the user. For Bitcoin proponents, this is all frightening no matter what. Like I'm not a fan of any of this. But Naomi, your take on the situation in Russia, I'd actually be interested to hear.
Yeah, I mean, it's interesting when you're talking about these intermediaries because they did amend their concept. They modified it to say that, well, don't worry, banks, you'll have the role of intermediary. We'll create this work for you. I mean, that's just as bad, saying that we're going to create this racket and have you guys as the intermediaries and custodians of these things when it's really not needed, just because, you've got a lot of money and you prop up a lot of politicians. So we'll make sure there's a seat at the table for you, whether it's needed or not. I mean, I hate that sort of stuff, obviously. And you see it all the time. Like, I hate that in Australia at the moment, when you have these cash bans, they're forcing you to use the banking system, whether you want to or not, whether you agree with the fees or not, whether you agree with the underlying ethics and principles of the banks. They're saying, no, if you want to do a transaction that's over $7,000 US, you have to use these banks. And so I just hate whenever you have the government coming in and forcing you to use sectors of the economy, industries that you wouldn't otherwise, companies that you wouldn't otherwise. It really is just a racket. And so it's not surprising that they're saying, hey, banks, don't worry, because of the monetary incentive. and that side of things. But it's still like, I mean, either way, it's just not a good situation. I agree with you, Will. Like, I just don't see an upside for the freedom of the people across the world as banks start rolling out this programmable money that is centrally controlled. But Jen, I'll throw to you. What are your thoughts on all this?
Yeah, I've said this on the show before that I think that CBDCs are going to force people who maybe weren't thinking about crypto to really start thinking about crypto and what it means for their privacy and the future of money. I had a question for the panel, though. Do you think that the rollout of CBDCs is going to incentivize banks to play more in the crypto space? Are we going to see banks really start to adopt crypto because CBDCs are kind of pushing them out of the market and out of business, do you think? I know Will's going to get mad at me. I need to direct my questions at a person. Nate, give us your take. Oh no, now Nate's also
Nate, I think you're on
quiet.
Mute too.
Oh no!
Wow.
Can you hear me now?
There we go.
Okay,
let's hear those wise words.
So if a central bank were to go and say, okay, private banks, you all now need to use this central bank digital currency, that's something that would likely be on the central bank to kind of to build out. If they're not going to build out a consumer-facing end, which is one thing, like because central banks have never really been consumer-facing, so if they're not going to go and kind of invest in that and have consumer-facing accounts, they would probably give banks the funds that they needed to build that infrastructure. So yes, in terms of funding, Jen, but in terms of like actually being able to like work with like all different kinds of digital assets, with like would they work with Bitcoin or whatnot, I feel like the central banks would have even more of a say as to whether or not they would work with Bitcoin. So I think that it would I think that it would definitely not I think they make them more likely to use whatever the central bank wants them to use in terms of digital assets, not actually involving other cryptocurrencies.
Yeah, I wanted to jump in and also go back to what I mentioned at the start of the show with China. So it's interesting how they're rolling this out. They've rolled it out into their subway system. Now, Beijing's subway system is among the world's busiest. It has a daily average number of passengers, more than 10.5 million, and this was years ago. I'm not sure what the updated numbers are, but basically they've rolled out through this mobile app the ability for passengers to pay using the digital yuan for fares, and they just announced this. Now, the digital yuan is known as ECNY, and it's been in trials around the country for about 3 months now, and so it is interesting to see how this changes transport, whether this creates more trackable movements of people. You know, I'm just very interested in this rollout. I'm also interested in how people are responding to this. You know, people who maybe were using largely cash before this, and now they're using mobile apps and everything is digital. It's interesting when you have this government coming in and coercing that and saying, you know, you have to start using this digital form. I wonder how the people respond. You have a lot of very, very, very rural areas in China. You know, how are they gonna deal with kind of being thrown into this world, not of their own volition, but because the government says you must now do this? So, I mean, Zach, what are your thoughts on all of that?
Yeah, I mean, I think the CBDC stuff is interesting in that it is very much not traditional crypto, right? It's not Bitcoin, it's not decentralized, it's very much controlled. So a lot of these privacy concerns are especially pronounced, and you're right to bring them up. It's really interesting to see this advance. CBDC central banks seem to think that there are advantages to rolling out these products, but it's going to be hard for them to find a sweet spot with some of these privacy concerns. And I think China may be the chief one to be concerned about. But yeah, certainly Russia and others exploring this, you know, a little gives you a little bit of pause. But yeah, we'll see. Any final thoughts there, Naomi?
Yeah, well, I want to throw to Will because you've got some interesting things happening in Spain at the moment as well. So let us know what's going on there.
Okay, we're not getting off the CBDC train. We're sticking with it, so stay with us. This is kind of a different story, though, within the CBDC track. So Spain's ruling party, which is a socialist party, they have both a presidency and a majority in the parliament, is now looking at issuing their own central bank digital currency. Of course, Spain falls under the euro right now. Like if you're anywhere in Spain, you're using the euro, and they've been using the euro for about 20 years now. And so the decision, or the possible decision, to issue their own currency would go back to how things were before the euro, or maybe it would work in tandem with the euro, just on digital rails. So it's interesting to see this aspect of nationalization kind of coming out of the CBDC conversation. As we were just talking about with Russia, the reason that they have been interested in CBDCs, and if you look at their central bank's policies over the last few years, is they kind of want to get out of the dollar's hegemony. They've been buying a lot of gold, they've been buying a lot of Chinese yuan, they've been buying a lot of euros, just try to offset their holdings of dollars. And now we see Spain kind of perhaps trying to get away from the euro because they want to have a notion of independence with their money as well, 20 years into the euro experiment. So there's a lot of shaken with the CBDCs today. It's actually a more interesting conversation than it normally is. Nate, I want to get your take on this.
Yeah, well, I think that this is interesting that so when all the EU states being on the euro gives them a fixed exchange rate, so they can have free trade and whatnot, but it doesn't give them the ability to kind of set up their own independent monetary policy. So all these EU states are kind of been dependent on the European Central Bank. And that especially during times where you have a pandemic or a global recession or whatnot, you are basically at the will of however, whatever kind of austerity the ECB wants to embrace. So it'd be interesting to see, particularly for Spain here, if they issue this, do they want to go and use it so that they can spend their way out of financial crises, or is it going to be more for just improving payments? Are they going to try to still track with the ECB's monetary policy if they have this kind of dueling currency? So it is interesting. It's a big break from the euro for them, and I'd be curious to see just kind of whether the ECB lets them do this. Does this affect their status in the union and that sort of thing? But it's definitely one thing where we've talked a lot about Bitcoin being freedom. Well, for CBDCs, maybe some countries see CBDCs as being their own kind of freedom from other kind of currencies and monetary policy that has been put over them.
Yeah, I want to jump in there. So the Spanish Socialist Party, the PSOE, presented an argument in Congress where I just want to read this out. I think it's hilarious. They say a digital public money, intangible and perfectly usable to make electronic payments, but in this case backed by the state, making it a safe money. In what world is a money backed by the state a safe money? We're literally all flocking to Bitcoin right now because we don't like what the state's doing to the US dollar. El Salvador is literally going off the US dollar towards Bitcoin because they don't like what the US government, what the state has done. You have so much distrust of the state right now, and they're getting up in Congress and saying, this is going to be great because it's a money you can trust because it's run by the state. You had money run by the state in Cyprus. People woke up, 2014, and 60% of their bank accounts were gone because they decided, well, we got to pay off some World Bank debt. And so you're just going to siphon it out of citizens' account. It's not a good situation when the government controls money. I'm very much looking forward to a world where we have increasing separation of money and state. And that really is what decentralized cryptocurrencies allow and what centralized digital central bank currencies disallow. And let's move towards the permissionless stuff.
All right, let's talk about some more coins. Let's talk about stable coins, y'all. This is the on the other side of the CBDC debate is stable coins issued by private consortia. And chief among those is the USDC stablecoin, which is issued by the Center Consortium, which is helmed by Coinbase and Circle. Had a little bit of scoop little bit of scoop here, a little bit of scoop on the site yesterday with this one. USDC, which is now a $25 billion concern. There's 25 billion of these things floating around on 4 blockchain networks right now. Could soon be on as many as 10 more networks. And we already saw Tezos yesterday announce that it was forthcoming. There are 9 others, some interesting names on this list, but really to me speaks to how interesting stablecoins are about to become. Stablecoins are squarely in the eye of regulators, both here and abroad, and USDC is going for the Tether throne by expanding to these various networks. I'm going to throw this to you, Will. Talk to me about like just the significance of stablecoins on blockchains, right? They've sort of become a key part in getting these networks up to speed. What's the significance of something like this with USDC or with any of the other dollar-backed stablecoins out there?
Yeah, for context, I think stablecoins are just very industry specific at the moment. They're used for traders to get out of positions if you're short or long, and you think the market's going to move one way or the other. You don't know. You just move into stablecoins. But we're increasingly seeing them touted as a new method for payments or remittances, and I think long term that's where it could go. That's where you could have stablecoins in your Apple Wallet or on your phone. Interesting to me that this scoop came out yesterday. Nice one on that, Zach. I saw it yesterday and immediately got me thinking about what Center is doing, because, like you said, stablecoins are like in the middle of the vortex of regulatory eye. Like they are looking at these things and making sure that they are scrutinized and that they're working properly. So Center is looking at all these blockchains, which kind of leads me to 2 conclusions. Either that chain is safe and sufficiently decentralized, like your Ethereums of the world, where it's nearly impossible to undo and go back and roll back a transaction, or Center has the ability to influence how transactions are made on that chain because there isn't enough validators, there isn't enough decentralization, and they feel safe enough to kind of like throw their weight around and protect their stablecoins that are issued on that chain. There's also like a discussion about interoperability between all these chains. So if you want to be able to move USDC from one chain to another, you probably can. And kind of looking at the list, you see a lot of these chains are Ethereum knockoffs of sorts, or at least have components of Ethereum that they've ported over. So like Tron or Kava or whatnot. So interesting to see Ethereum's presence in the stablecoin space only increases with more blockchains being added to that ecosystem. Nate, what's your thought on stablecoins and more blockchains being added here?
Yeah, I think this is like Zach had said, this is very relevant given like recent comments from at least one Fed official kind of looking at concerns about Tether. Others like Brainerd at Consensus and Jay Powell earlier before that had kind of talked about stablecoins as being worried about the risk it could pose to consumers and businesses. As to whether, talk about whether or not they were fractional or fully reserved. And I think that another element that central banks will be and other regulators will be looking out for is access. If stablecoins become a regular form of payment, can they be used everywhere? Basically, can everyone use them? Because at a certain point, it'll be those regulators will be looking at kind of consumer protections and wanting to make sure that anyone across the spectrum can kind of use this. But I wanted to throw it to Jen. You had some thoughts there.
Yeah, I actually just had a question. I think I'm going to throw the question to Naomi. I mean, people who are entering the space, we hear about Bitcoin, ETH, Doge. Stablecoins feel like there's a less sexy narrative if you're just kind of a newcomer. Why should people pay attention to stablecoins if you're not a trader like Will was talking about?
Well, if you're not a trader, I mean, there are different use cases, right? I think speculative reasons are a huge reason for stable coins. And if you want to hedge, if you think the crypto is going down, you may just want to transfer it into a stable coin. If you take it out of the crypto sphere, I mean, there's all kinds of friction. There's all kinds of fees associated with that. You got to wait several days for wire transfers, all of that stuff. So it makes sense that people are looking to like an equivalent of that fiat money in the crypto space. But the other side of things is like everyday purchases. It can be super simple to be able to pay for for something and not do the conversion of, well, how much Bitcoin is that? What's the price of Bitcoin right now? It's all linked to fiat. Now, on the other side of things, I think fiat is getting inflated away. So maybe we should stop calling them stable coins and start calling them inflated coins or something like that, just to get the message across that these are not these sturdy things that you should necessarily be parking your money in. But what have we got coming up after the break, Zach?
We're going to talk about congressional blockchain caucus and crypto backdoors. Oh my. Oh no. We need to watch out for that. We're going to talk about that after the break. Stick with us. It's the Hash. I hope you can hear me because that was not fun. Stick with us. We'll be around. We're here now.
From fueling local economies to connecting global markets, the future of money is taking shape now. CryptoState by CoinDesk will bridge communities of crypto investors, thought leaders, and developers from around the world. Together, we will tell the global story of decentralized finance. Join us for this virtual event series as we stop in Nigeria to dive into the movements that are disrupting markets and changing communities. Register today.
All right, folks. So banks want in on Bitcoin. Digital asset firm NYDIG is joining forces with enterprise payment giant NCR to offer Bitcoin buying and selling services to 650 banks and credit unions. This comes after a string of announcements from NYDIG. They partnered with banking technology providers like FIS, Fiserv, Alchemy, and Q2. So for a little bit of context, to step back here, some financial technology firms will try to change banking by kind of hitting up the largest banks in the world, your JP Morgan Chase, your Bank of America, whatnot, your HSBC. And others instead try to go after kind of your community and regional banks. So they try to hit up the technology providers that provide either payments or banking core services to those banks. So this is an interesting bid by NYDIG, telling community banks, credit unions, you can compete with not just the big banks, but now compete with some crypto exchanges by being able to offer buy and sell services with crypto to your clients. So I'm curious to know, I wanted to throw it to the group, how do you guys want to see crypto purchase options at your bank? Would you switch from your bank to one that has an option to purchase crypto from it? Do you prefer your banking apps to be separate from your crypto apps? What are your guys' thoughts?
I want to hear Naomi's thoughts.
Yeah, Naomi, go in, queen.
That's a great question. I mean, anytime you use an exchange, you're basically wiring money over to that exchange anyway. So your bank is invariably a part of that process. There's nothing you can do to get around that unless you know people who have large amounts of crypto that they sell on a regular basis, in which case you don't need KYC. You can buy directly from them. It's not considered like money transmitter. It's just, peer-to-peer sale. I always prefer that method than going through exchanges, but it's definitely super helpful just to be able to wire money over. Now we're looking at places in Wyoming, like you've got Avanti, you've got Kraken, you're probably going to have that integrated bank feeling where you don't have to be worrying about wiring money. It's all just going to be there in your account. I think this is another example of that, where it could just further streamline the process. So I definitely think that it's going to help a lot of people. It's not, it's not a huge barrier these days, though. Like when you're dealing with something like Coinbase or anything else, it's so second nature for us to just link our credit card or link our debit card or link our PayPal or anything like that when we're buying things on the internet. And crypto really is no different. We've come such a long way, and that friction really has evaporated. You just kind of add in your debit card and, voila, you can buy stuff. So, although this is going to take down the friction, I don't see the friction currently as being insurmountable or even really noticeable on a lot of exchanges these days. But Will, what are your thoughts on all this?
Yeah, I'll go quick and then throw it to Zach. I think any single way to get more Bitcoin into more people's hands is the best way forward for decentralizing the currency. We talk a lot on this show and in Bitcoin in general about how you want to decentralize the network, meaning like the nodes and the mining machines and all that kind of stuff. But you also want to decentralize the currency itself. If you want Bitcoin to be a currency, then it needs to be in as many hands as possible so people can exchange with it. And I think that you have these banking partners who typically would not interact with Bitcoin at all. They're opening the doors for the consumer who would not be interested or would not be able to purchase Bitcoin before getting into the space and further decentralizing the currency. But Zach, your thoughts?
Abstraction layers. I'm bullish on abstraction layers, and I count this as an abstraction layer, right? This is NYDIG partnering with, some like, bank software provider that you've never heard of, but is foundational to how you do your banking online. They're sort of abstracting away anything that you need to know to be able to put Bitcoin in your bank account. And this, to me, seems to be an emerging trend in this sort of what the mainstream embrace of Bitcoin looks like here in 2021 and going into 2022. So I think services like this are really important and really key. Just to go to Will's point, right? This is further accessibility for an asset that still to most people is difficult to get their hands on. So if they can park that, in their trusted financial middleman, it's a bit not in keeping with Bitcoin's decentralized ethos, but it's certainly a convenient way for people to get their hands on this thing. I'll toss to you, Naomi, for the last thought on this one.
Yeah, just a quick sum up, and then I'll throw to Jen. When, Will, you're talking about the decentralization, and Zach, you touched on this as well, I think that, you are also introducing all these intermediaries, making them like a kind of foundational part of this system. So I'm interested in a world where we can evolve past that point. And when we get it into people's hands, but then people can go to things like Thorchain or other decentralized exchanges and live a free monetary life rather than having to rely on these intermediaries. But Jen, I'm going to throw to you. What have we got next?
Well, before we move on, I just wanted to add to your point there, Naomi. I think also when we look at regulation, like regulators cracking down on exchanges like Binance, it feels a lot safer to that mainstream audience, people who are new to crypto, to kind of just interact with their bank, who they already, for lack of a better term, trust. They already have all of their money now. I feel like maybe for people just getting into the crypto space, it feels a little safer for them. But we'll move on to the last story. Okay, some interesting comments here. U.S. Representative Bill Foster, who's also the co-chair for the Congressional Blockchain Caucus, said in an interview that a crypto backdoor that allows legislators to reverse transactions is key to the success of crypto. The congressman said that until the industry was able to grapple with ransomware attacks, total anonymity would be very hard to sustain. So interesting comments here. Naomi, I want to kick it right to you. I know we've all been throwing to you for first comments, but is this even possible?
Oh my God. So, he says, many in Congress see Bitcoin users as de facto participants in criminal conspiracy. Like, that just sounds like a man who's backed into a corner, who's now desperate because he sees that the government is losing control of the money supply, and he doesn't want the separation of money and state, right? De facto participation in a criminal conspiracy, it's so ridiculous. It's the idea that anyone who uses encryption, anyone who values privacy is a de facto criminal. Anyone who dares to do anything that, maybe the government can't see, you're a de facto criminal. What have you got to hide? Like, I think it's so important that we just push away from this narrative, because it is killing us. It is choking us. The idea that we need these pervasive eyes just like all watching, all knowing and everything we do, and we can't possibly have money outside of their scope of visual range. We can't possibly have communication outside of that scope. I mean, this rhetoric makes me so angry. And as a community, we should be pushing back against it, pushing towards decentralization, towards privacy, towards the right to financial privacy. That's my little mini rant. I'll throw to Zach. What are your thoughts on this?
I mean, yeah, I think you're right. I mean, the whole privacy is for bad guys thing. It's hard to get away from that talking point, and I don't know. This doesn't help it, right? I think this both illuminates like what the conversation is and where a lot of the misunderstandings are around these technologies, right? These are pseudonymous systems. They're not necessarily anonymous systems. There's ways to do this probably right in a transparent fashion, but some of this stuff is just crazy talk. So I see your hand is up, Will. What's your thinking here on the matter?
Well, like the common tagline with all this stuff is, why would we ask Congress people who can't even print an email or don't even know how to send an email to make decisions on the future of technology? And the simple answer is we should just ignore them. Unfortunately, they're in a lot of positions of power, so that's something to kind of grapple with. But I think overall, just like these comments, they always like come up. They always come up. They don't go away, and they're going to keep coming up in the future. Uh, but I think they're just not valuable.
Yeah, I'll just add to that we really need to make a distinction between this mass surveillance and targeted surveillance. It's another instance of it. They think that it's going to help them to have access to every single private transaction, every single person. But when it comes down to it, when the government is going after criminals, they always have a lead. They're not sifting through this giant haystack to try and find a needle, hoping something will pop out. They're already targeting people. And if they're already targeting people, they can get a warrant. And if they have a warrant, then they can specifically target someone's device and get access to all of their transactions anyway. It doesn't matter if you're using Zcash or whatever. If you're specifically targeted by the government, they're going to find a way to put malware on your device and then going to get that information. It's ridiculous to think that all of us need to lose financial privacy in order for them to catch these bad guys, because the way they catch them is complete opposite of mass surveillance. Mass surveillance is about control. It's not about protecting us as a society.
All right, let's leave it there on those big, weighty topics. Thanks, Naomi. That's good stuff. We're going to wrap it for the day. Hopefully it's smoother tomorrow. That was a little rocky here, guys, but we toughed it out. We made it through. Nate, thank you for being here with us today. Jen, Will, Naomi, as always. I'm Zach. It's a pleasure. We'll see you tomorrow on The Hash, and until then, read CoinDesk.com. All right, thanks.
Bye.
Bye.